Welcome to Bears in Exile. Today is October 24th, and it is time for the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, another nice bullish day. Um, we said in the daily running thread last night or the day before that I think it was last night that this has become the bulls market to essentially to lose. If it were to fail, they have only themselves to blame for it. The Bears are really beat up bad. Um, but we are at the moment of truth. We are a hair away from the 200-day moving average, and if it breaks that decisively, it is most likely just game over, and be looking for huge covering rallies. It's just the sky's the limit at that point, because at that point it will be time for the Bears to throw in the towel, by the book. So short-term moving averages definitely leaving the bearish bar in the dust. It is almost completely gone at this point. Short-term moving averages, yeah, there's a tiny bit of excessive separation, but it is uniform. We have no wobble. So good signs for the bulls. Beyond that, CCI massively high. Stochastics very high. 14-day RSI moving average almost at overbought. Almost. Side tick on the RSI, uptick on the histogram, uptick on the MACD. And beyond that, in the 60-minute time frame, the bulls were able to bust some of the divergences. And we knew that was a possibility, but nonetheless it happened. Yes, we still have negative divergence in the CCI. They broke the divergence that we had in the fast stochastic and the slow stochastic. We still have extremely long-term divergence in the RSI, but they also destroyed some of the negative divergence we had built up here in the intermediate term. So that is very good for the bulls. We still have long-term divergence, major divergence in the MACD histogram, but breaking that divergence in the stochastics was a really good thing for them. Really good thing for the bulls. So, oh, there it is. And on the 60-minute time frame, yeah, sloping down on the CCI, the stochastics, side tick on the RSI, side tick on the MACD histogram slanting down. Still, this is absolutely an incredible move, and kind of a bummer they busted the divergence, but that's okay. That's okay. Moving right along to the SPX, of course, very nice looking. Essentially everything the same as the Dow, no need to rehash that. Coming up on the 200-day moving average, waiting for a reaction or a gap above it. I think it'll be one of the two. 60 minutes, more of the same. Busted the negative divergence in the stochastics, both of them. And do we have divergence in the RSI? Yes, we still do. We still have it in the CCI, still have it in the MACD. But yep, stochastics, divergence, gone. And the VIX, yep, got below 30 once again. Short-term moving averages breaking down from the bullish bar, which is being destroyed. CCI ticking down, stochastics, fast stochastic ticking down, slow stochastic ticking up. 14-day RSI moving average very low. RSI trying to hook up way too early. Down tick on the histogram, down tick on the MACD. What do we have left in divergences? Yep, we still have it in the CCI. Stochastic divergence was destroyed. RSI divergence has been destroyed. Still have divergence in the MACD histogram. So bears just losing it, losing it, losing it. And that is what it is. TNA, very nice day. Getting reaching above the bar with the real body of the candle. Still have to have the short-term moving averages clear the bar, but it is above the upper price consensus level as of today. CCI very high. Stochastics overbought. 14-day RSI moving average, more room to move than the SPX or the Dow. RSI getting a little bit of a hook at overbought. Uptick on the MACD, uptick on the histogram. Now, if this rally is the real deal, and it certainly appears that it is, it would appear that TNA does have more room to move than the Dow or the SPX should the small caps get hot once again. Look at all the room to the 200-day moving average way up here just below 70. And if I think that there isn't going to be some kind of a turnaround and this is going to the moon, I will definitely be playing this one on the long side. 60-minute time frame. Do we have any divergence left? CCI, yes. Stochastic, no. RSI, if we look back really long ways, barely. Almost not enough to count. MACD histogram, yes. But very strong, very strong. It does look like the 60-minute is setting up for possible down move. You have the slope down on the histogram. Stochastics are in a position to move down, but you know, things have been positioned for a move down in the shorter time periods many times in the last 2 weeks, and each time the down move has not produced any kind of real results. So terrible for the bears, great for the bulls. UUP still breaking down, bearish engulfing of yesterday's candle. Short-term moving averages pointing down. CCI oversold. Stochastics oversold. 14-day RSI moving average almost getting to the bottom, not quite yet. This has been absolutely incredible, UUP. Way back here we were saying that it was going to get the downslope on the 14-day RSI moving average and march down. What threw us for a loop was that we did not get the stochastics going up to meet it and then joining it for the ride down and get a little tongue-tied. Instead it was just a march down. So yep, that is what it is. RSI massively oversold, downtick on the histogram, downtick on the MACD, below of course the lower price consensus level, and not looking pretty, staying below the 200-day moving average. Really bad sign for the bears. So not good at all for the bears, not good at all. FXE, what a rocket this has been. Bullish engulfing, short-term moving averages breaking almost through the bearish bar, coming up on the 200-day moving average. Stochastics both overbought, CCI overbought, RSI very overbought, and uptick on the MACD. Looks like a side tick on the histogram. Maybe it's a tiny bit, yep, a tiny bit up. And there's the euro for you. Euro strong. Second VIX GLD. Just kind of hanging out with our essentially double flatline. Uptick on the CCI. Right back to dead neutral. Slow stochastic pointing down. Fast stochastic pointing up. 14-day RSI moving average poking above oversold. Uptick on the RSI, uptick on the histogram, uptick on the MACD. As weak as the dollar is, uh, this should be higher, but apparently the lack of fear is the overriding factor, and this one has just been stuck. So, yeah, if we get a turnaround, then of course this will go up, but as it stands, not much to work with. Certainly the 14-day RSI moving average is in a position to march up, and the stochastics are in a position where they could aid it if they turned up, but still too early. And SLV, still not getting that move up for a bar retest. The bar is moving down to meet it. You can see that the middle Bollinger Band is in the middle of the short-term moving averages. It would be nice if it was either above it or below it to help give some indication of what it may do. 14-day RSI moving average hooking up and better than gold, and everything else essentially getting a little bit better move up, but still nothing to write home about. This is a waiting period. And a quick look at GE just to see what it's saying. GE does normally lead the market, and it had an update. It is an inverse hammer, a miniature one. It is above the bearish bar, which is collapsing, and the middle Bollinger Band is below the short-term moving averages still. It closed above the upper price consensus level. It did almost kiss it and back away from it. Very, very nice. 14-day RSI moving average, very, very, very high. But we have no hook whatsoever. So sloping down on the MACD histogram, side tick on the MACD, side tick on the RSI, very high. Fast stochastic heading down, slow stochastic heading down, uptick on CCI. So what do I take away from all of this? Well, it's a bull move, and it's the bulls to fumble. And until they do, if they do, the bears are toast. So maybe we'll get a reaction and a pullback at the 200-day moving average, but we won't know until we're there. And if we gap above it, oof, then I guess it's off to the races. The world is fine. So there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.